Couple of thoughts right off the bat. One is the president is not committing to announce a summit with Xi Jinping. There had been some reporting earlier in the day that he was likely to announce that. It turns out he doesn't announce that. He says maybe 4 more weeks of negotiations here, maybe 2 more weeks after that to get the deal papered, as he says, before ultimately there is a summit between the president and Xi Jinping if they get to a deal. You heard some very positive rhetoric there from the president about this deal. It'll be the best deal ever. It'll be a terrific deal. Things are going very well. What you didn't hear, I was in the Oval Office during the run-up to this, the part that we didn't just play back on tape. And in that run-up, the president went around the room and talked to each of his advisors, including Robert Lighthizer, the U.S. trade representative, and Peter Navarro, the trade advisor to the president. Both of them made comments in the Oval Office just now that were substantially more skeptical than the president's remarks were in terms of the progress on a deal. Navarro suggested that the end of a marathon is in fact the hardest part of the marathon. Lighthizer suggesting in a similar vein that they have a lot still left to agree to. So the advisors who are really in the weeds on this had a noticeably different tone, I would say. Also, I asked the president, what are the sticking points here that still remain? And he brought up 2. He said one was intellectual property, the idea of the Chinese stealing American IP. And then also he said ultimately tariffs, whether they remain or not, was a sticking point as well. Those are the core things of this negotiation. And those are the 2 things that the president cited as remaining as sticking points. So it gives you the sense that there is still a lot to achieve here. The president, though, saying that the talks are going well. Liu He, sitting just behind him and to his right, seemed optimistic, seemed maybe buoyant at times, a very friendly smile on his face. So this is an administration that feels like things are going well, but is also careful to suggest that we're not there yet, Melissa.
Was there any talk by President Trump at this point, Eamon, about any sort of enforcement mechanism? I would think that could be a major sticking point because, I mean, if he intends on keeping the tariffs in place, we're seeing a turn in the Chinese data. I don't know if the Chinese really have an incentive to get a deal done faster or give in on some of these major points.
Yeah, that's a good question. He did mention enforcement as a sticking point also later in the Q&A session, but he didn't say exactly what the problem there is. So I imagine that's one of a long list here of issues that are still unresolved. Not clear exactly how fast this can all happen. The president suggesting 4 weeks. That's a much different timetable than a lot of people in this town had suspected even earlier today when they thought the president might be on the verge of announcing a summit with Xi Jinping. Obviously, that's not happening. So these negotiations are ongoing, continue throughout the rest of the week tomorrow, and we'll see where we go from there. But the president clear to suggest that things are still going very well. He's pleased with where things stand right now.
All right, Eamon, thank you. Eamon Javers joining us from the White House. So the S&P 500 continues its string of gains today, but how much is really priced in with this market? How do we react? How does the market react, Guy, to these headlines, which continue to be positive, but they lack in specifics?
Yeah, I mean, my answer a couple of weeks ago would have been the market's going to sell off. Now the market, to me, it's become so desensitized to all this. I think it's probably, maybe it sells off a few handles in the S&P, but it's sort of full speed ahead. And I think it's been full speed ahead because, again, of the rhetoric out of the Federal Reserve. And I think you asked the right question to Eamon just now. I said it last night. I don't think the Chinese, given the fact that their market's raging back and the data's been better, I don't think they're all that incentivized to do a deal. And I think some of the things we just heard now sort of backs that statement up.
I mean, if you're the Chinese, right, you want the tariffs off. He wants to keep the tariffs in place. If you're the Chinese, enforcement, you want the U.S. to come and check up on you in 90 days and then 180 days after that or whenever the time frame is. I mean, that's just not, characteristic of what the Chinese would want. Sovereignty.
So, and I think that's a detail that's obviously critical. And I'm not sure that we know that detail. I think the assumption is that they've agreed on, effectively what the terms could be. But how it will be monitored is the toughest part of this whole thing. And if monitoring means actually we keep tariffs on until we feel comfortable, however we feel that, yes, I agree with that. But I would still say that what I have heard, and based upon what my expectations would be to what China could agree to, any deal right now that at least has been talked about is bullish for China. And I think they should take the deal. It may not mean that they want to agree to these types of monitoring approaches, but therefore I think China's in a good place here.
So it's really interesting today. We're talking about what does it mean for our stock market. Guy brings up the fact that the Shanghai Composite's up 30%. I don't think that the Shanghai Composite is a determining factor in whether China takes a deal prematurely or not. But I do think what's really important when you're assessing the performance of global markets is that data that we saw in Europe today. When you think about Germany, you think about factory orders, you think about exports, and what they are specifically putting their finger on, it's exports to China. And when you think about this, the longer this stuff kind of drags on is the longer that we're just really getting the global economy in the sort of slump that has caused that Fed pivot that you've talked about. It's caused the European central banks to become more dovish. And I just think the longer that goes on and the longer stock markets globally continue to levitate, that creates a very dangerous situation. I just want to make one point. I love Guy Adami, but you just said, a few weeks ago I would have told you that it was going to be this. And now you said, well, the announcement, it's a couple handles in the S&P. That's kind of dangerous because that's the level of complacency we're at right now. I mean, just saying, Guy. I love
fair.
you.
No, that's fair.
It's
It's beaten me into being complacent. Fair point, but I'm going to take my complacency hat off now.
I feel like we're in a data tit for tat almost.
Yes.
Because you can point to the reading in Europe overnight, and then you can also say, you know what, China PMIs on Sunday were good.
Right.
So, like, what do you?
Yeah,
what do
and
you
this is
see
just
here?
one. We're taking one piece of data right now, and it's been a good one. And I think, Guy, you mentioned they're raging back. I think part of the reason the Chinese markets are raging back is because they're sensing the possibility of some sort of a deal. I mean, so I think it's a little bit of both. I think it's what's really starting to elevate us. It's obviously, I think, coming down from below to elevate the Chinese markets as well. We continue to see everything is short term, everything's a trade, and nobody's looking out very far. But for the most part, it's pretty interesting, Mel. The one far out trade that I had today was ASHR. It's a China 300. That was another one where an ETF going all the way out to October. We haven't seen anything like that. Everything's been very short term. So they were going to the upside, expecting more from the Chinese markets to the upside. So I think if we get any kind of a deal, the Chinese markets can rally off of that. I think our markets can rally off of that. And not this particular earnings cycle, but the next earnings cycle, I think, is very, very important because that's when we're going to start to, if we get some sort of a deal sometime soon, that's when I think we're going to start to see some of these earnings start to get levitated up.
The best thing that's happened to China here is, on some level, the trade war, because the trade, I know this sounds perverse, but the trade war actually forced their central bank. Remember, our Fed pivoted? PBOC pivoted before actually the Fed did. And that's very important because a year ago, PBOC was pulling in credit because they have a credit issue. But guess what? In the short run, they don't care about that. And there's no question that stimulus has won out, and I think that's really what it comes down to, also positioning here. Whatever the market does day to day, RSI's relative strength, momentum, positioning, complacency over in that corner, I'm just kidding. I don't think it's there. But my point is that I do think that whatever happens at this point, certainly markets' next move could be lower just because what a run we've been on. Look, we're in overbought conditions every place, but that's just tactical. This is all about positioning. The headlines. Are you talking
in the U.S. or in China?
I'm talking about everywhere. I'm talking also, this would be, I'm talking maybe 2 to 3 days if we're talking fast money lingo here. I'm saying, look, the good news is that global central banks are easing. U.S. economy is going to grow north of 2% in the second quarter. The IMF has upgraded the second half of 2019, and I think actually the European data has bottomed.
You know how the Fed pivoted, and we think, if the U.S. economy rallies, if the U.S. stock market rallies, does the Fed then get a little tighter get more active? The same could be true for China then. If we get a trade deal and the Chinese economy starts to really pick up, do they take the pedal off the metal in terms of the stimulus? And is that a better situation? How does that change the environment for investors in something like an Asher or FXI or whatnot?
I think Tim can speak to what the Chinese would do. My sense is they probably wouldn't. I think they'd let things sort of accelerate for the foreseeable future. And then the next question is, would that force our Fed's hands? And given some of the lingo we've heard here, probably not as well. But at a certain point, there are consequences, and that's something I've said a long time. But clearly, it hasn't manifested in terms of the stock market.
I think China has more social issues to deal with their Fed, quote unquote, and therefore I think they're going to let this thing run. I think, I really do. And I do think that some of the key levels, 3,200 on that Shanghai, is very important. I think it's important for global risk.
Where are you invested right now in terms of China? How are you invested?
I'm invested in the mega caps. I'm invested in Alibaba and Tencent, a little bit of Baidu. I own EEM, and I actually own some levered and some options in the space that actually somewhere in here, to be tactical with some part of that, I think, you take a couple chips off the table. But my view is it's going higher.